Greetings and good day. I hope you're doing great. I'm here with you. For the daily WTI oil analysis on March 13th, we're looking at the weekly time frame. As we witnessed this past week, oil prices, with the start of military conflicts between Iran and the US, saw
Learn and enter the world of binary option with us. Binary option indicators, powerful strategies, learn, trade, win. Level up your trading.
over 23% growth experienced. With military tensions continuing to rise over the last weekend, we saw that on the first trading day of this week, Monday, March 9th, WTI oil opened with a growth of over 11%. On the first trading day of this week, the price, after opening with an 11% growth, continued its upward trend to reach the edge of the weekly FVG at $112.78. Then we saw a price reaction to this level. And with the release of news regarding the possible release of oil reserves, oil prices also decreased. As a result of high military tensions throughout this entire week, oil prices underwent over 32% in price fluctuations. And now today, the price is trading in the $92.6 range. We are now examining the 4-hour time frame, observing that following the decline that began on Tuesday, the price dropped to the 4-hour order block range and then encountered strong support right here. The deep decline that occurred followed the announcement of oil reserve releases by various countries. And after the International Energy Agency, or IEA, and the G7 announced their decision regarding this release, we witnessed this strong downward movement. But even after the meetings regarding this release on Wednesday, and after various countries, including Germany and Japan, announced their decision for this release, we are still seeing an increase in the price of oil. And this indicates just how much of a high impact the existing tensions in the Strait of Hormuz have on global oil prices. According to the latest report we had, Japan has decided to release its oil reserves on March 16th. The U.S. Energy Secretary also stated that 172 million barrels of oil have been released. Among the reasons why oil prices continue to rise despite the release of oil reserves, we can consider that this release might take weeks to compensate for the shortages. Emergency oil released from strategic oil reserves may take weeks to reach various markets. Also, we must keep in mind that this amount will cover a very small percentage of the current supply disruption caused by the Strait of Hormuz. Examining the 4-hour time frame, we see that the price, after reacting to the 4-hour order block, began its upward movement. Following the rapid movement it had around the $89 price point, a BPR zone was formed, which in subsequent candles we saw the price return downwards. And after reacting to this BPR zone, it continued its bullish path. We are currently analyzing the 1-hour time frame. You can see that the price has been consistently creating higher highs and higher lows. In order for us to see oil prices pull back and enter a downward channel, we need to see a reduction in Middle East tensions, and until then, we will consider the overall sentiment for oil to be bullish. In such conditions, avoid trading sensitive assets like oil, and if you intend to enter trades, we will try to look for buy positions during corrections and at liquidity points. As a bullish setup, as you can see, the price has swept the liquidity of its previous low. But due to the proximity of this FVG, we'll wait for the price to also collect the liquidity in this 1-hour fair value gap around the $90.82 range. And after that, we can look for entry into buy positions using various strategies. Good luck and stay profitable.
Do you know why your profits are smaller than your losses? Because you don't analyze your trades, you just execute them. Download the Trading Journal app for MetaTrader 4 and 5 for free now.